Hello guys and welcome to another learning video in our candlestick pattern series. You would have known by title that we are going to learn about candlestick pattern called the inverted hammer. Okay, so let me just write that here. As we always do, we use trading view charts itself to cover any of our explanation. So right there is inverted hammer title for today. Okay, so this inverted hammer is a counterpart of this is a counter part of the candlestick pattern called a shooting star. Okay, so those who have not seen what a shooting star is and how a shooting star works, I request you to watch a video we have done on a shooting star, where we have covered how a shooting star works, how it works, and when it works, and where it works, and what time frame it works, and when it's going to play a very important role. What are the factors that makes this shooting star very important? So we have covered all this in our shooting star pattern video. So I'll leave the link below in the description and also towards the end of this video. So those who have not seen the video of the in shooting star, I request you to watch that video, because both this inverted hammer and the shooting star both are gonna look same on the chart, but where it comes is gonna change, whether this pattern is going to act as a bullish pattern or a bearish pattern. Okay, so before we start any of our discussion towards the inverted hammer, I request you to hit that subscribe button. You have not subscribed to our channel yet, and this is where we do post market analysis video every day, and we see what are the opportunities that we would have taken towards the market when the market was live. And this is the place we also learn a lot of the technical analysis concepts. Like this one today is a hammer. Right now we are in a candlestick pattern series. In this pattern we already have covered hammer, we already have covered the hanging man, we already covered bullish and bearish engulfing patterns, we have covered a couple of concepts before. So we have all these concepts explained in our candlestick pattern series in our playlist. So please do uh, watch all these videos if you want to gain the maximum knowledge and stay on have that upper hand towards the market when you are trading on the live markets. All right, so let's start now. So inverted hammers, to start with, its anatomy, it's going to look something like this. So you'll have a real body, and you will have a shadow, which is an upper shadow like that. Okay, so now along with this, I'll change the color of, yeah, I've changed the color. So this is a typical shape of a inverted hammer. Okay, this is the anatomy of the candle, where you would like to see a opening and the close towards the bottom range of your candle. Okay, and coming to the bottom, you need to definitely have a tail towards the top, the wick towards the top, which is more than 2 or 3 times than the bottom part. Okay, okay, wait, let me also add one other another detail here, which is the bottom wick. You can have a bottom wick, but you cannot have that more than the height of your real body right there. So to start with, let me write write this write the points there, so you can take the screenshot of this if you want for your reference. Okay, so here you need to see the real body. Okay, so that you need to see the real body of the candle, real body towards the bottom range. Okay, that is your first point, and your next point should be excuse me, you need to have an upper shadow, which is 2 to 3 times. Okay, 2 to 3x more than the real body, real body of the candle. And your third point is your bottom shadow should be less than the real body. Okay, so this explains the anatomy of your uh, candle, and these are the 3 points that you have to remember. And one more thing is, The color of the candle doesn't matter. You can either have a red candle or a green candle. So the color doesn't matter. Color is not important. All right. So here we have, excuse me. So here we have the anatomy rules of your inverted hammer. Okay, and now we'll go and see what a, you know, where should you see this. Okay, so these are all anatomy rules. These are the anatomy rules of the candle. Now we'll see. Okay, where should it come? Location. So in order for you to consider any candle that is looking like this, as an inverted hammer, then you should see, of course, it has to meet all these criteria parameters before, and then it has to come after a downtrend. Okay, so you should see this after a downtrend, only then it can be identified as a inverted hammer. So in other way, this is a fifth point in this, you can consider it as fifth point, but I'm just um, taking the anatomy rules separately from the location part. Okay, so this is a inverted hammer, and you know what inverted hammer is? Yeah, it is a bullish sign. It is a bullish reversal pattern. Okay, so this, if you see any candle like this, whether it is green or red, then that can be called only as an inverted hammer only if you see it after a downtrend, and if it's having its real body towards the bottom range like this one, and if it is having its upper shadow which is more than at least 2 or 3 times more than the real body of this candle, and it can be either red or green in color, and the bottom part either you can have a uh, completely shaven bottom. This is called a shaven bottom. If you don't have anything towards the bottom, if you don't see any bottom shadow or a wick of any candle, then that can be called as a shaven bottom. Either you can have a shaven bottom, or also you can have a very slight or light shadow or a wick towards the bottom, which is less than the size of your real body of that particular candle. Okay, so these are the rules of inverted hammer. And then the very important point is it should come after a downtrend. So even the shooting star is going to look exactly like this, but the difference is you should see a shooting star after an uptrend, whereas in this case you should see the inverted hammer after a downtrend. So even though the side the format, the form of the candle is same, it can be called with two different names based on where that candle is appearing, whether it is after an uptrend or after a downtrend. So to understand what a shooting star is, as I told you earlier, you can watch it in our candlestick pattern series. Okay, we have a pretty detailed explanation done on the shooting star also, which is a bearish reversal signal there. Okay, so here one more important point that we need to add is, in order to take any position towards the call side or towards the buying side, so here you need only one extra confirmation. So here you need a confirmation can come only after a next candle. Okay, next candle close should be greater than the inverted hammer close. Okay, I hope that's clear. So we need to have a confirmation. We can enter into this position only after seeing this confirmation, where you need the next candle of after this after this inverted hammer. Okay, you need to see a next candle close above the inverted hammer close. So in this case, this is going to be the close of your inverted hammer. So you need to see a next candle close above this, only then this is a valid reversal signal. Okay, so if you meet with all these parameters, now you can pretty much take a trade. But as I warn you always, there is no such pattern in the universe of the stock markets in technical analysis that which works 100% of the time. So this is no exception in that case. Okay, so here you need to be careful if you're taking to a trade towards the upside. So if you have another candle which is, okay, imagine if the candle is open there, okay, and it is closing there, and it is a green candle, okay. So in this case you can take an entry into the closing of this candle here, okay. If it is having a wick, or if it is having no wick, that doesn't really matter. All right, yeah, so that doesn't really matter. So what matters is the close of this candle. All right, so you need to see the close of this candle above the previous candle's close. Okay, so in this case, you see this candle's close is this because it is a green candle, this candle's close is this because it is again a green candle. So this is higher than this, so in this case you can enter into a trade there. But what if it doesn't work? In that case, your stop loss should be, wait a minute, let me draw a line there. Yes, so in this case you should take the lowest point of these two candles as your stop loss. All right, so let's write our rule here, saying stop loss. Okay, so your stop loss should be here. So in the other case, there is one more possibility where, imagine for example, if this is a candle which doesn't have any upper shadow, and you have this shadow towards there. So in this case, this is the lowest point of these two candles. So in this case, what you should do is you should get your stop loss to this point, just a point below that. So in order to take this stop loss into consideration, you need to wait for any candles closing below this level. You cannot just simply take your stop loss if your prices are coming towards uh, crossing this level but not closing below this level. You cannot take that as a stop loss. If this level is your stop loss, which means that you need to see a close below this level, only in that case this is going to be a valid stop loss. You can accept that the prices have turned their direction. All right, so what if this is a red candle now? Okay, what if this is a red candle now? Doesn't matter whether it is red or green. All it matters is all it's mat all that is going to matter is the close. So now in this case, this is going to be the close because it is red candle, this is going to be the open because that is the red candle obviously, and here you have the bottom. So in this case, the close of this red candle is greater than the close of this particular green candle. So even in this case, it is going to act this pattern is acceptable even in this scenario. All right, so I hope you have understood the rules. Okay, first rule is you need to have a real body towards the bottom. Second rule is you need to have an upper shadow which is 2 to 3 times of this particular candle, and you need to have a very small bottom shadow, or definitely not a bottom real shadow. If you have a shadow, that should be less than the size of your real body there, and then it should come after a downtrend. Remember this point, this is very important here. Okay, so you should wait to see it coming after a proper downtrend. All right, and for this particular candle you need to, whereas for the shooting star you don't need any confirmation. So that is the difference between the shooting star and this. So like I again suggest you to watch the shooting star video so that you understand that concept thoroughly as well. So here you need to say confirmation candle. So what is the confirmation? You need to see the next candle close higher than the inverted hammer handles close, and that is what is here. Whether it is green or red, in both the cases, in both these candles, it really doesn't matter. And you need to have this as your stop loss, and then you need to have you can have your targets towards based on the swing highs on your left, or excuse me, and also you can have your targets based on any other technical analysis. If you have any trend lines, if you have any indicators, you can make use of this knowledge and take a trade towards the upper side. Okay, so this is a bullish reversal signal. So that's all we have to cover for the candlestick pattern of inverted hammer. Now now what should you do is, okay, so for those who want to uh, take a screenshot of this, you can take a screenshot of this and then keep it as a reference for a quick a revision of this rules, so that you can have it handy whenever you want. All right, so Now let's look at some of the examples, okay, in the bank nifty itself. So we are right now in the bank nifty chart right there, in a 5 minute chart of bank nifty. Now let's check whether we can find this pattern in our actual bank nifty chart. Okay, so for that we have already, so don't worry about all these levels, we have drawn it so that we can, and these levels are drawn from our post market analysis videos, so please ignore the levels. All right, okay, see, right here we have the inverted hammer. You see this particular pattern, okay, you see this particular pattern, it is a shaven bottom. We don't have anything with the bottom part of, we don't have any shadow there. Okay, I'll make it big so that people who are watching it on the mobile can see this candle better. All right. So now here you don't have any bottom shadow of this 945 candle, and you have a top wick, that is upper shadow, which is pretty much more than three times, definitely more than three times of this, and your real body is towards the bottom range of your candle. And when it comes to the location, okay, when it comes to the location, it has come, you might think that it has come after these two, after one red candle, it cannot be called as a downtrend. But if you see on a larger picture, if you see on a larger picture, here we have a, all this is downtrend. Okay, so it is coming after this much of a big downtrend there on the left, so that's okay. So here you see what has happened, and the next candle is also a green candle, where you have seen a close above the close of, above the close of inverted hammers close. See here this candle, and your stop loss should be there, because this is the second candle low, is the lowest of these two candles. So now you see here, you might have seen prices bank nifty coming towards crossing this level 10, coming towards the bottom, but we have not seen a close there. But see what has happened next. Okay, and also this is a hammer, by the way, and also this is a hammer, by the way. So those who know what is a hammer, and those you know these two levels, whenever you see an inverted hammer with a proper confirmation, that can be also taken as a support area, drawn as a support area. So here if you draw a support area, this hammer is coming at the right at support area, and you already have this information, you already have this signal that it's going to be a bullish. So irrespective of this particular region towards the top, which might be a resistance, yeah, if you look at, if you look at the chart on a bigger picture from the left, you see that this is a support zone which is holding up pretty nicely from the last couple of days. But what has happened today is, irrespective of that support area, now prices are coming from the bottom, so now this becomes a resistance area. So irrespective of that resistance area being there, you see the kind of momentum that it has created. Okay, you see the kind of momentum that this pattern have created. All right, so here you would have entered, see the kind of momentum. Okay, see the kind of momentum. If you see a larger picture, see the kind of momentum, see the kind of momentum that you have there. That's how, that's why it is very important, that's how it works on real charts. That's one example. Let's check some more examples. I've done the homework and marked it, so it becomes easy for you to go through. And I also recommend you to do a proper back testing, candle by candle. I recommend you to check candle by candle and see where you can find a proper inverted hammer with a confirmation candle. So here we have again an inverted hammer right there on November 20th of bank nifty. So here you see this is an inverted hammer, and then here we have the confirmation candle for that. Okay, and of course it is coming after a good downside moment. And now see, before that, see here, see those who know candlestick patterns very better know that they would have taken a trade here, because this is a, what is this, this is a harame pattern. Okay, we'll discuss about harame pattern in our next video. But here we have an inverted hammer, and look at this again, irrespective of, okay, so here the bottom part of these two candles is that. Okay, again I'll zoom it a bit, because most of our viewers are watching, might be watching it on the mobile. So this is the lowest point of these two sorry, these two candles. Okay, and then here we have, and again if you notice, these two candles are bullish engulfing pattern. Oh my god, this is crazy. So if you know the candlestick patterns, you will really start to talking with the charts. Okay, so forget about the bullish engulfing pattern. Okay, so here we have inverted hammer, and here we have the confirmation candle. Okay, and this green line is representing, is indicating our stop loss. And look at the markets. Okay, look at the markets after that. Look at the markets. See the kind of momentum that it has created. Okay, from there, look at the kind of momentum that it has created on that very particular day, and look what happened. Okay, so here until uh, until a good 3 days, it held this as a very good support area. But look at the kind of momentum that it has given towards the upside. If I measure this moment alone, this is 180 points, 190 points in the bank nifty, which is huge, right? Which is definitely huge. Just by knowing this candlestick pattern, and just to know when to use it with a proper identification of that pattern, you can definitely have some good trades on your from. Yeah. Okay, so here, okay, so where do we have? Okay, we don't have a we don't have a pattern there, but see, this is because of this pattern, I guess. I would have, yeah, yeah. Okay, so this is because of this pattern. See, here you have a bullish engulfing pattern there. Okay, so, and see, this is a shooting star, this is a shooting star, and see the momentum it has created, and your target is reached there. Okay, so where do we have our next pattern? Looks like here we have, yes, looks like here we have an inverted hammer there, and again it has turned out to be a bullish engulfing pattern as well. But you see, it is also coming after a downtrend. It has seen such a big downtrend, but it didn't come exactly after a downtrend. It has created a couple of swing highs. See, until you don't see any swing highs and lows, it's fine. But in this case, you have seen uh, the market creates some highs and lows, and then you're seeing this pattern. But still, it worked to certain extent. Here you see, it still worked for certain extent of 66 points in this case. But after seeing this bearish engulfing pattern, that too at this resistance area, you would have taken down your trade there, and that would have been a slight profit or no profit at all, but it's fine. Okay, so we have done the backtesting until the November, and now we are in October. I'll leave that backtesting part to you, so I request you to do enough backtesting of this pattern, because by now you know what are the rules of this candles, right? This particular candlestick pattern works brilliantly in some cases that we have seen in the last few examples. And I hope you have understood the complete concept, and thank you so much for being towards the end. It's not about how much time you have spent watching this video, it's about how much of the concept you have grasped towards. That's going to help in your trading is more important than the length of the video. That is why we don't hurry up things in our channel. So I again request you to please subscribe, hit that subscribe button, so that you can watch more such interesting and new concepts towards the stock markets in a much meaningful manner. And if you like our content, please do let us know through the like button. And thank you so much. See you in our next video.